Hey everyone, welcome to the trading floor's 25 days of Tradesmas. If you're already a TTF member, check the announcement channel in the Discord for today's giveaway. If you're not a member, make sure you stick around to the end of this video to find out how you can win $1,000.
Hi, this is Sven from the trading floor, and I'm back with Happy Case 2 on the pound-yen 5-minute chart. This time I want to quickly recap the trading week, where we want to trade in more detail, and also take a look into the prop firm challenge account. So last time we took off with that trade here, which ended up being a loser. It was also the first trade in the prop firm challenge, so I thought the challenge was loser, but hey, it is what it is, right? So price pushed to the upside, broke that high. At that point we were looking for longs. We did get our nice pullback, did get our signal. This signal ended up being a loser because price pushed up, didn't break the high, pushed up again, once again didn't break the high, and then actually it switched trend. So it would have caught a loser here. As you can see with the red cross, I didn't manage to catch the trade in the account. Checkmark means, yeah, I did catch the trade. So the next 3 trades, I didn't actually catch them. Overall, break of structure, pullback, nice signal here. It was a more shallow pullback, but remember, we allow on a trend change, we allow a shallow pullback also to be enough for us to actually trade the signal. Pullback, signal for a nice short, break of structure, push down. We would have caught a winner here. Next pullback, we can even see without a FIB retracement that is a pullback above 50%, so a valid trade for us. On that signal here, once again, break of structure, another winner, which we also lost, didn't catch. So that means the strategy is actually -1 +2 +2 for a total of +3, or in my case, then 3% ahead of me. So after that break of structure, once again, a decent size pullback above the 50% level. We did get a new signal here. That was a very nice signal, quick to take profit, very nice and easy. And then something rather not that usual looking back happened. So at that point, price did push down. It went beyond the recent low, but it didn't close below it. So that was only a wick break. We need a full body break for a break of structure. Price pulled back with a decent size. So from that high to that lower, the pullback was over 50%. And we did get a new signal. And that trade here is the one I want to review in more detail. So before we jump into what I did with the trade and why I did that, I want to highlight that if I just followed my standard rule, that is get a valid signal to put the stop loss above the pullback high for 2R. In hindsight, of course, that would have been a very easy trade because pound yen just fell off the cliff later on. But at a point here in time, I didn't feel that comfortable putting my take profit all the way down here, and so I deviated from my standard plan, and I want to run you through my thought process. So let's pull that back in, and let's hop into replay mode up to the point when we did get the signal. So my expectancy at that point was that because we have these equal lows here, I would have expected that price would push below these equal lows, so it would actually break. So I expected trend to continue. But I expected the price would react rather strongly from that level because equal lows typically attract a lot of orders. So my expectancy was that price would push back to a very deep pullback, maybe even switch trends, potentially. So I was not comfortable putting my stop loss here because putting my stop loss here would then again mean that my take profit is way below here, down below here. So I was looking for maybe a more aggressive stop loss placement. And for that we have to zoom in and take a look at how the pullback looks like. We once again use our market structure for that. Use a different color for that. So I start at the bottom. We see a push up, down, up, very shallow. We might not call it a pullback. So let's all the way up here. Push down, up, down, up, down, up. So you can see the pullback was very trendy, a clear uptrend in the internal structure of that pullback. At that point in time here then, price did break the internal structure for the first time, pushed back, and broke it again. So at the point where I did get my signal, that already was confirmed by the internal structure that we are shifting back. So that's very neat. So that gave me the first indication that that high here might be a good place for a stop loss if I don't want to go all the way to the top. In addition to that, if we take a bit out of our SMC toolkit, we can mark up some zones. The first zone would be the supply zone up here that formed the first push down. We can see the price push down and then went back into that supply zone here, so it was kind of mitigated. So the price should not have a reason to go beyond that point because that zone was already tapped into. In addition to that, if we look on the leg up, we can see on this push up, it formed this zone here. I'm using now these two candles because the push up actually encompasses both of them. So I use both. And we can see on the push down, price tapped into that demand. It held it first, it pushed up, and then it pushed through that demand. So that demand got flipped. This gives also an indication that that high should be pretty solid. So I put my stop loss above here, and that then brings my take profit, a 2-hour profit, closer to my equal lows. So this was my first deviation from my standard trade plan, that I didn't put my stop loss on the high, but on the last confirmed structure. So the second deviation then was that I didn't want to actually risk a deeper pullback. So remember, I was expecting price to break these lows and then see a very strong action, because equal lows typically, like I said, attract a lot of orders. So my fear was that I actually did get a break, but it didn't get to take profit, and then I have to sit for a long pullback, and that if I move to take profit closer to the equal lows, it's around 1.75 to 1.8. So for additional 0.25 hour or 0.2 hour, I would have to sit through all this potential pullback. I didn't want to risk that. So the second deviation was that I didn't put my take profit at 2 hour. I put it at a bit less than 1.8 hour. So, and from now, let's continue with the price action, because I deviated one more time from my standard trade plan. My standard trade plan is just fire and forget. Set a stop loss, set a take profit, and then just wait for the trade to end either way. It's fine. So we can see it pushed down nicely. At that point, it reached its local low. After that, it went up. So far, so good. This also happened in the middle of the night for me, so I wasn't worried about it at all. But in the next morning, London session, we did see the following happening. So let's zoom in a bit. This is exactly why I did get a bit worried. What we can see is the price pushed down again. Very nice. And according to what we would like to see, right? Price even just barely had a body closure below that recent low here. And then we did see a reaction. And that alone here is fine. I wasn't worried, because it's okay to see a reaction from a recent low. And this also tapped into this zone to the left. So all good to see a bit of more like little pullbacks. I did get worried when we saw one push down, rejected. Second push down, rejected. Third push down, couldn't break below, just wick below. And then we did see a very strong push up. At that point, I was worried that, because what you typically see, if a price cannot break one side, it often then breaks the other side. So I was pretty worried that price from that point would push beyond this high all the way to the extreme. And even if it was sent at that point, my trade would have been a loss, right? And maybe even price would also get back into bullish territory. And I was worried because it didn't manage to go past that area here. So at that point in time, I put my trade at break even. So I put a stop loss to entry, or a bit lower to cover for commissions and fees. My second thought on that was, if price actually would end up pushing up and the downtrend would still be intact, so something do like that and then go back down, I was pretty confident I would get a new signal here, so I wouldn't lose that opportunity. I would just have to hop back in. And that is exactly what happened. So I then quickly got taken out break even at that point, and I had to wait for a bit, and then price pushed up. Actually, my stop loss would have helped, but who knows? New signal, I jumped in on that, and that was a very easy trade. Once again, I did cut the stop loss a bit, so I saw all this level here, so I did put it on that structure, and that actually bought my take profit by 2R even before the equal lows. So that was pretty neat, and that was a clear and easy winner. And that then also brings me to the end of the recap, because that was the last trade on pound yen I took last week. So all in all, if we would just kept it simple and put it on top, same result, but that was what I was thinking during the trade and why I managed the way I did. So last but not least, as promised, we take a look into the trading account now. As you can see here, it's a 10K account. It's a prop firm charge account on True Forex funds. And you can see this is the first loser here we talked earlier about on pound yen. This was a false entry I entered before the close of candle. And once I noticed my error, I closed the trade again. This trade here is a bit of a bummer. As you can see, I trade pound yen and NASDAQ on this account, and I forgot that True Forex Funds actually has an error in their NASDAQ specification, which results that our risk calculators actually under-risk your position. So it opens at 20 times less big size than it should be. So that $10 plus should have been $200 plus. And if you look in the overall account is sitting at $639 plus, so 6.3%. If that would have been correctly sized, I actually would have passed phase one already with over 8% profit since last Thursday in November. So we started on the Thursday, on the 30th of November to Friday, December 8th, or 6 trading days, and I managed to make 6.3%. It would have been 8.3%, but hey, it is what it is. So overall pretty satisfied by the result. And that is for me for now. Thanks for listening and good luck with the trading. Bye.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below and come back tomorrow for another video and another chance to enter.